But our next guest says he's starting to get bullish. Jim Paulsen, Paulsen Perspectives author, joins us now. Jim, give us some good news. Why are you bullish?
Well, thanks for having me, John. It's such an interesting day here. There's a lot of bad things going on. I totally agree with that, but there are some good things. And one of those things is we finally got to total panic stage here. And that's often a sign that you're getting close to the bottom of a market. Even a few days ago, we had a lot of people that said they were bearish, but they still had a big commitment to the stock market. Well, I bet when those new numbers come out, we're going to see that equity exposure has come down a lot, cash has gone up a lot, holdings. In other words, it can't go down as much in the future simply because there's not as many people left to sell. That's a very good thing. Another good thing that's going on is even though the Fed is yet to ease, there's a lot of stimulus already being brought to bear on this situation. Bond yields have dropped almost 80 basis points from their highs just a couple months ago on the 10-year across most of the yield curve. They've come down a lot. That's a lot of easing already present. The dollar on real terms is down a fair amount here over the time. Again, another easing move that's been put in place. We've had a significant drop just in the last few days in commodity prices. Oil, I think, fell this morning on futures to like a 4-year low. Industrial commodity prices are in a plummet overall. Again, that's a stimulant coming to the situation here. So it's nice to see that happening. We don't have the Fed, but I think they're going to come sooner than we think.
Okay.
I look back. Yeah, go ahead.
You said close to total panic stage. Tell me how you're measuring panic versus rational reaction and how earnings guidance will factor in.
Well, I think that panic is partly a gut feel, John. There's no doubt about that because we've had a lot of these surveys that have been saying pessimism for quite a while. And I didn't really buy that, but just the behavior and the feel of the last couple of days is totally different. That's kind of what I was waiting for. And then if you want some quantitative evidence, you can look at the VIX blowing out today close to 50 and really ending the day on its highs, suggesting a fair amount of panic there going on overall. So I think that's, it's scary, but that's what brings about an end to the situations, in part because people have adjusted already and now their sentiment is so low, even bad news is better than feared, rather than bad news being even worse than they thought. And I think that changes the dynamics. Also, the stupidity of what we're doing becomes more obvious, if you will. The stupidity of enacting a massive tax increase on the entire global economy at this point doesn't make much sense. And I think it doesn't make much sense for the Fed to stubbornly not want to ease. I look back this morning at all the two-day movements since 1965 that have dropped, at that point, 9.3%. And there's only been about 7 other two-day periods like that. And every one of them, the Fed almost instantaneously eased. And in addition to that, look what the commentary is coming from some reliable sources. No inflation is seen in the bond market. Break-even rates are in free fall across the bond market. No inflation seen in the commodity market. I just mentioned they're plummeting. No inflation seen in the inflation-sensitive stocks in the stock market. Energy stocks were terrible today, for example.
Yeah.
My point is that the Fed's going to lose many voices in its favor. I think it's going to be forced to ease.